Gold and silver have rallied significantly in the last couple of years. But what about platinum and palladium? Have they been forgotten? Are they about to catch up? Let's take a look at it. Let's go. Hello and welcome to another MCO Global video. My name is Ben and today we want to take a look at the platinum and palladium charts because they haven't really done anything exciting in the last few years, but I believe they could be very interesting, especially long term, maybe also short term, especially platinum. So we want to take a look at the price charts from an Elliott Wave point of view because both of these assets are currently in support areas on our charts, whereas obviously gold and silver, they have fulfilled their bullish outlooks. I've been covering gold and silver on YouTube for the last 2 to 3 years. Since then, I have been bullish. Platinum, palladium, I have a bullish view as well, but we don't really have a clearly bullish setup. But we want to take a look at the charts in a minute. Before we do that, I want to show you some data, and we'll switch to that right now. First of all, this is the platinum gold comparison chart, you could call it. I'm going to zoom in a little bit here. Now, what it shows you is in orange, the gold chart, and in blue is platinum. Why is this specifically interesting, especially platinum versus gold? Is because gold historically has traded for a lower price than platinum. But platinum has obviously switched places, you could say, with gold. They've swapped. And since, I think it is here, around about 2018, gold has traded at a premium compared to platinum, whereas historically, for the last 20, 30, 40 years, it's been different. So this is something noteworthy. Many factors contribute to that, especially less demand from the automotive industry for platinum. Now, platinum, as far as I can remember or recall, it's platinum. Around 40% of the platinum demand comes from the automotive industry. Palladium is much more. Okay, so palladium has suffered much more. Obviously, there is a reduction in diesel vehicles and so on. And platinum and palladium have been used for diesel vehicle manufacturing a lot in the past. But palladium is more affected by that. But platinum as well. And platinum has, as you can see, for the last few years, it hasn't really done anything exciting, whereas gold has moved up. And historically, they've kind of correlated, however. So when platinum moved up, gold moved up as well. Okay, there has always been that kind of correlation. Now you can see there are some outliers here where platinum just crashed down in 2008 because it was significantly overheated the market, right? Gold not so much, but still they've kind of moved together. But then that correlation kind of stopped in 2018. So this is something to keep in mind. Yeah, platinum, basically you could argue based on this that platinum compared to gold, just looking at these two, not including any fundamentals, but just looking at these two, platinum seems undervalued compared to gold. Okay, that's something to think about. And then there are some other graphs I want to show you. Nothing significant or nothing too major. But there is an article here on the CME website, a CME group, and basically what they say, and this is what the graphs show here as well. They say that okay, we've got platinum and palladium. Yeah, obviously you can compare gold, silver, and then you've got platinum, palladium as sort of the ones that come sort of behind gold and silver. I think in terms of popularity, not the main reason is that obviously gold is mainly an investment metal, you could say. It's store of value, and it's got a special place, you can say. And then we've got silver, which is also, it has a lot of demand, in industry demand as well, but also seen as an investment. Platinum, palladium, I think historically have been seen even more as industry metals, and they are, right? But obviously now with prices much lower than they were historically, especially for platinum, could it be a really interesting entry point for long-term investors? Maybe. So let's take a look at what they say here. So first of all, it's between platinum and palladium. Yeah. Before we take a look at the charts, let's talk about that. So what's the difference here? And in terms of demand and fundamentals. Now, what they say is that so now, first of all, they trade pretty much at a similar price now. That's something noteworthy. And here they say that the platinum and palladium, especially palladium, is moving into a surplus. So that means there is basically too much palladium around. Okay, so there is more supply than demand. That's not great from a fundamental point of view. Now that can come from the automotive industry. They've started to move from palladium to platinum, for example, in certain areas. And also because of that surplus, which is forecasted, so there's just too much palladium around, investors, money managers, they have moved into short positions. So that means, yes, palladium is vulnerable to short covering rallies, you could say short squeezes, but also from a fundamental point of view, it's just not great if there is more supply than demand. In contrast, platinum actually, they say platinum's fundamentals are much more attractive. With the current market deficit, so there's a deficit, there is less supply than demand, and they expect this to continue until at least 2028, also to a degree coming from the automotive industry. Now this shows, the graph shows this quite nicely here. Where do we have that graph? I wanted to show you. I can't make them large, unfortunately, so I have to zoom in a little bit. Not sure if that works. It probably doesn't work that well. But here in figure 4, you might not see it that well. But basically they say that palladium is transitioning. It is transitioning, to a surplus market. So you had here, and you might not see it that well. I'll try to describe it to you. Before kind of 2024, it was a deficit market. So there was more demand. Now, into 2028, that's the expectation, there will be more supply than demand. Apparently it comes a lot from recycling. Whereas that is different for platinum. I'm not sure if they have actually a platinum. Yeah, platinum, this is the same graph essentially for platinum. No, sorry if you can't see it, but unfortunately they can't expand this. But let me explain. Basically, you see it here that it's moving into a at least forecasted, it's just a forecast, deficit market, and it's been in that forecasted deficit market since 2023. So from a fundamental point of view, it could be interesting, especially compared to palladium, which seems to be in a market where there's just more supply than demand, and then you've got platinum, more demand than supply. In addition to that, you've got that, you could say, gold platinum ratio, where platinum seems to be undervalued compared to gold, especially gold being in all-time high territory, and being expected to top soon. If you saw my gold video, I can recommend that. You can do that on this video, on this channel. Then that could be potentially interesting. Now let's see what the charts say. I want to start with palladium, and I want to start here on the 4-day time frame. Palladium, however, just structurally seems to be in some kind of a diagonal pattern to the upside. So it's not impulsive, okay, which leaves it vulnerable to quite deep pullbacks. My view is, and that's the good news, most of this correction seems to be done. We have a rally from the 2003 lows. We have a 3-wave move up in wave 1. So you see here 3 waves up in wave 1. It's not an impulse, can't be impulsive, not with a 3-wave move up. Now there will be the people who call this a 5-wave move, difficult, especially with wave 3 being clearly a 3-wave move as well. So you've got wave 2 then, sharp pullback. Also the fact that this is a very sharp pullback indicates this was just an ABC rally. Then we have an ABC structure in the 3rd wave, and then here a 4th wave. Honestly, this is already where it needs to be for a 4th wave. I can make a case for a completed correction, and then wave 5 could send the price higher into the area, possibly around $6,000 long term. That is really just very, very long term. Can't tell you how long that will take. Hold on, I need to fix this. Can't really tell you how long this will take, but it is, just looking at the time scale here, this started 2003, so we talk about, this entire chart that we see here is around about 20 years and a bit more, obviously. And it tells you about the current cycle. So we have 3 waves up from that significant low, and we could get one more high in wave 5. But the main challenge whenever we're dealing with a wave 4-5 pattern from an Elliott Wave point of view, the main challenge is that we don't really know if the wave 4 is already over. However, we can identify when a corrective pattern is complete or nearly complete, and that is, in my opinion, the case. Yeah, you can never really tell if this is going to come down again. What it tells me, though, is that really long term, it seems to be very interesting from a chart point of view without confirmed bottom at this stage. Now, there is a support area, and to be fair, I need to take out the lower box. My expectation would be that it finds support in this area between $511 and $1,060. Good reward to risk ratio, really long term. We know that a fourth wave, even in a diagonal pattern, should not break below the 61.8 retracement. So there are two levels, really. Okay, educational moment here. From a technical point of view, when we talk about these diagonal patterns, there are two things that shouldn't happen. We don't want a sustained break. It's about a sustained break. We don't want a sustained break below the 61.8 retracement. That's at $511. And I don't want to break below the B wave low, and that's at 455. Yeah, so this is this level here. We don't want to break below that. So two key levels to watch there. We're far away from that, but the long-term potential is quite decent. Yeah. Now this is just one way of measuring targets. Another way is to take the length of the wave 1, yeah, and then go to the low of the wave 4. And I can really only use the low that we have currently. I don't have a confirmed low in place. It's very important to understand. And the 100% extension is a typical target. Now, as you can clearly see, when we arrive there, we haven't even made a new high. So we probably have to switch to the next FIB target, 4,770, 5,850. Honestly, that will be a long-term target range anyway, and still then you would have a really good reward to risk ratio. Now, what we have to pay attention to when then a rally starts is the structure. But because we're dealing with a diagonal, the rally will likely be an ABC structure. So it could be this, ABC in the white scenario, which would be bullish, which means we have to pay very close attention to the structure of that rally. If it's an A wave up, it could be a 3-wave move or a 5-wave move. So I'm from here somewhere, okay, and I haven't got a confirmed low, but from somewhere here, I would expect a rally. And then when we get an ABC rally completed, it might be white wave A or yellow wave B, and we won't know until we get the pullback afterwards whether this is the white count or the yellow one, but that will be years in the future, okay? I would expect from somewhere here a rally, and I cannot rule out another test of, for example, the 50% retracement at 737, because it has really only been moving sideways since February 2024, as you can see here. Now, I can, if I really want to, define an upside structure here, but it would be an ABC structure, and that might be ABC in the white A wave or within a yellow B wave, which would then lead to another sell-off. So you see, because we haven't got any impulsive price action from the lows, I don't really have a long trade setup as such. The only invalidation point I can offer at this stage is at $834. So you could say, I believe we're already going up. Below that, I've got my stop below, because below that level, it's likely gonna reach that next larger FIB level around $740. Yeah, it's not giving us any 5-wave move up from the low, which means that it's challenging to say we've bottomed. When would I start to say that we have potentially bottomed? Well, minimally, I want to say it's a break. I need a break above the February 25 high at 1,030. That's not really going to be strong enough. So yeah, I mean, it's difficult. I need a break above these highs, October 24 at 1,250. So you see there's a lot that needs to happen. I like this count. I like the idea that Palladium has already bottomed. So we just have to be cautious until we really clear these highs, because this is all based on ABC patterns. Looking at the micro, I don't really want to dive into the microstructures, but it is possible that this is a small 1-2 setup and the price goes higher in wave C of A. Now let's switch over to Platinum. This means here we have a potentially cautious bullish outlook, yeah, on the micro level. On the larger time frame, there is, I think, a bullish outlook, especially as long as we're holding above support, and even if it's just a larger corrective rally. So there is a good outlook. Let's talk about the potential for Platinum, and let's go to the weekly chart. Do we have a similar structure here, or is it anything different? Now, this chart shows us that we also have a 3-wave rally, but it's a slightly different structure. Yeah. It's a slightly different structure that I am tracking as, here, large ABC in yellow wave A. The move down started already 2008 in a B wave correction. Yeah. So if we compare that with Palladium, when did the correction actually start here? In 2022. No, hold on. Let's move on a bit. Yeah, 2022. So the correction started much later. You could argue that Platinum has been in the correction much longer. So more of it has been corrected. More of that initial rally has been corrected. Seems to me that that correction could indeed be completed here in March 2020. Okay, from then we've seen another rally. We'll talk about that in a minute, but you can see that if this is an A wave up, a B wave down, then the C wave up, there seems to be a lot of potential there, because a target for a C wave is we take the length of the initial A wave, then we go to the low of the B wave, and we talk here about round about $4,000 as first ideal target for wave C. We have to see how the microstructure develops, but this would be a long-term target, so pretty much a... So in terms of price target, yeah, we talk about, you know, 3,975. Now we are around $1,000. That seems to be a decent return, long-term outlook. Yeah, it's always important then to understand, okay, but what is the key support level? What's my key risk management level? And if we zoom in a little bit, I go to the 2-day chart now, then we see that, yeah, potentially a B wave, that would be my thesis. A B wave bottomed in 2020. Key support here for a 1-2 setup is $678. That gives you clear risk management levels. Below that level, it becomes very likely that this B wave is resetting. Yeah. Now the problem with this chart is as well, it's moving only in corrective patterns. So the rally from the March 2020 low is only in 3 waves, and then here it's just been consolidating. Honestly, there is no evidence as such that we are going higher. But because we could be in some kind of a diagonal pattern to the upside as well, because the initial response to the 2020 low is clearly a 3-wave move, I have to assume the third wave also is an ABC pattern. And this is where it's getting extremely messy. So for both Platinum and Palladium, I cannot really confidently say that we've bottomed. But there is a clear support area, and it's definitely something to watch. And both, I think, show upside potential. Now, when we talk about fundamentals, it seems to be Platinum more than Palladium that could outperform. Here, looking at the charts, I mean, they both have decent potential. Actually, just looking at the long-term chart, it seems like Palladium could outperform Platinum. But again, what I just showed you as a target up there, 4,000, that's only the first ideal target. It's not a maximum or anything. If Platinum is faster than Palladium, and it, you know, we could easily get to 6,000, 8,300. These are targets, but I wouldn't really rely on those. You don't trade for stuff like that. We can keep that in mind, like 4,000 to 6,000, kind of a long-term target, but it's really long-term. For now, I think we need to pay attention to the structure here and whether it's bottomed already. And this is difficult to say, but I think we are in a bottoming area, yeah, and I would rather use dips potentially to accumulate personally if we dip into this support area again. At the same time, we're consolidating below a trend line. I'm observing this trend line. I love these 45-degree angle trend lines. They are very reliable. If we break above this trend line, it could take the price directly higher. Okay. At the moment, I'm counting from an Elliott Wave point of view, I'm counting this as a combination of A-B structures, 1-2 setups, because the initial rally from 2020 low is also like an ABC structure. So it's not impulsive, which makes the probabilities very balanced. But from a reward to risk point of view, especially long term, this is interesting. I would say from a reward to risk point of view, definitely more interesting than gold, which is close to, well, which is in all-time high territory essentially. Yeah. So I'd say short term, if the price breaks below, I would say especially this region here, January low, September low around $900, then it will likely extend its current correction, might even reset the B wave, might reset even the larger wave too. But once we get a break above these red trend lines, I think we might have initial confirmation that a low has formed. So that should give you a good idea of the overall outlook for Platinum and Palladium. Also the potential, price potential, especially compared to gold. If you watched my gold video recently, it shows Platinum and Palladium are in an interesting position. That doesn't mean they have to go up next month or something, but long term, I think they are looking much more interesting from a from an investor point of view than gold. Yeah? However, they are not really classed necessarily as investment metal that much. So personally, I wouldn't really want to have that much platinum and palladium in my portfolio from an investment point of view. But it could still be interesting as maybe an addition to a long-term portfolio. And when you're trading this, you have very clear levels that allow you to understand when we finally move into an uptrend. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, make sure that you also activate the notification bell. Let me know in the comments which other asset classes or topics you are interested in for future videos. Thank you very much. Bye-bye.